What's good, pussies? Welcome back to another video. Today's going to be talking about the trade recap that we did today and the absolute fucking manipulation we got on Monday. If you guys did live trading today, you guys probably saw this move happen right around 3. This was the biggest live manipulation that I've ever seen. There was no news, no FOMC, no statements, nothing for the US dollars or US currency to come out today, and we had the biggest move to create all-time highs and reach a level that I will be talking about very shortly. Let's talk about real quick the weekly outlook. Now, if you guys know, I didn't have a weekly outlook. I didn't have a bias for today. And I'm actually trying something out. I'm trying to just not have a bias at all until I get on the charts at like 8:20 at school. And then, then the chart is really freshened up because it just had Asian and London session. What I don't like and what I kind of hate doing is having a bias before going to bed and then waking up in the morning, looking at it. And if it looks good, oh yeah, my bias is correct. If it doesn't, then I flip my bias. And that's messed me up a lot because then I have the wrong bias. And what ends up happening is I take losing trades with the wrong order flow. And that's another video I made. So you want to have the right bias. You want to have the right order flow. And that's what I'm focusing on. Now, right away, when you look even at the 1 hour, we're going to stand on the 1 hour here. You can tell that there's a range that's like kind of forming here, right? And this is green lines because why not? I'll make him black for you guys. You can, oh my God, you can tell that there's a range here that it's trading in, right? Price is not making new highs. It's also not making new lows. So this is external high. This would be external low. Until we see a sweep of either one, right, we don't really know which direction we're going to be going. You can see we're on the S&P 500, so SPX. And you can see that it almost got, it traded up to this high up here and kind of consolidated back into this range. So a lot of choppy price action. Even if we look at the daily time frame, you'll notice that it's going to be a little hard to see, but I'm going to try to make it clear. You can see that this doji candle created that range here, and for 1, 2, I guess now 3, but for 3.5 days, we stayed inside this range, which really, really sucked. And if you guys have anything, from Wednesday, well, actually this was push days, and then from Wednesday to Friday, we had some horrible days, and we lost some money. Now, obviously on Monday was a little different. Let's go back to the daily real quick. I want to talk about this standard deviation leg that happened on the daily. You can see that this is the last swing low that we have before this absolute run up, and this was like a couple months ago. This was last year in October. So this was the really low swing low, and this is what started it all. And that's important because it did a market structure shift here, and the fact that this is important and this is a key level. This is key level, right? Because this level created such an expulsion move up, we want to pay attention to what happens down here. And what you can see and what you can probably notice is that there's a market or a daily market structure shift, which happens at this swing high here. So we mark the standard deviation from that swing low to that swing high. You can see the highest level we have marked here is that -4 standard deviation leg, okay? Most retail traders that trade standard deviation, and what ICT teaches too, is the -4 would be your last kind of defense line, if you will. Anything above the -3.5 is you're not really targeting, or you're not targeting while you're in a trade. You should not be in a trade above when price hits -3. I'll show you on the actual standard. Yeah, this one. So as you can see, standard deviation can go all the way up. I mean, we can do 6, 7, 8, and we can go all the way up. But 5 to me is the top of the top. I'm not trading until there. What I'm saying here is this range right here, when price comes up to here, when you're in a trade, you should not be let's say I got in a call here. I should not be trading when price gets to this level here. I should be completely out. And the strategy I trade with the ICT 2022 model is I get out, depending on the price and where liquidity is, either between 2 to 2.5 in that range. That's where I get out if there's a trade. Anyways, going back to a more cleaner one. -4 is here. Mark that out. Let's go on the 1 hour. Now, coming into the session, I didn't post anything in Discord. Actually, I probably did. Let me check real quick. Let's see if we have anything from like yesterday. What was this? 26. We're the 29th now. Okay, no, that's not gonna be. I don't think I have. Might have. Okay, I do have this. I have this. I want to try to not to do much analysis before market opens, as it forms a predetermined bias, which is not what I'm looking for. It's exactly what I talked about. Studying how price moves and reacts when market opens, when my bias taker, blah, blah, blah. And the NQ has a bearish SMT with SPX. So when I was doing my analysis this morning, I saw this bearish SMT, but this bearish SMT happened a while ago. Actually, it happened basically Friday. So this is an old SMT, and you can see it did react off of it. But I thought that because we had a high time frame sell side liquidity down here on NQ and possibly a daily market structure shift being formed, I thought that NQ could easily come up into the premium, hit some kind of order block. As you can see, there's a pretty bullish engineered institutional order block created right there for us. Tap into that, maybe get some buy side, and then come down. As you can see on SPX, it looks exactly the same, and come back to sell side. But that was the bias. You know, we didn't really act on it. But I said ES looks bullish. As you can see, ES and SPX looked bullish. And we had absolutely no news for today, for Monday. So really nothing. And that's what happened with that. So ultimately what I saw was a, what's called, here's the order block, right? And you can see price 6 a.m., 8 a.m., right? Came into that order block. Let's jump down to the 15 minute. The 15 minute, what I had marked was this. I had a, what's called the top of the order block here. So the top of the institutional order block marked out like this with the red. And I said, okay, that's the order block. If we're going to sweep it, we're going to come down to sell side and down here. What I also had marked out up here was this 15-minute market structure shift. Only problem was it wasn't actually a market structure shift, and I was fooled. I'm not sure where. I'm trying to find where I was actually. I think I had something like this. I thought that this swing, this up here, this swing high, came down to this swing low, and I had this as the market structure shift. And so I took my standard deviation and lined it up like this, and I thought that the standard, wait, no, this was not it. Wait, where's the, was it on NQ? I think it was on NQ that I saw, oh, it was, yeah, it was on NQ. Okay, yeah, so it was on NQ, not SPX. So on NQ, what I had is the same on SPX too, but on NQ on the 15-minute, you can see there is a market structure shift that happens, and that's, I thought we were gonna, because I thought we were going bearish, the order flow was bearish. I was like, okay, this is bearish. Although what I didn't recognize was this whole movement here in the pre-market. This is just what I hate about this whole week is just back and forth price action, and you can't really do market structure shifts as well because if price doesn't respect them, it just doesn't. But I was smart. I drew the standard deviation or market structure shift here on the 15-minute. Obviously, standard deviation swing high to that internal swing low because it took out a fair value gap. You can see standard deviation kind of lines up. And I'm pretty sure, okay, no, I didn't, but if we line this up with the actual, yeah, it lines up with the -3, yeah, so that's what I saw. So yeah, I thought, oh yeah, we could definitely go lower because of this one thing. You see this low down here, that almost protected low? See where it lines up with the standard deviation? It's almost near the -2.25. Now, what that means is if price wants to come down, it's already pierced through these levels. It's already swept this sell side. All it needs to do is pierce through this low. And you know what that means? That if we enter down here or wherever the OTE is, and we target the -2.5, the risk is less because we're not looking to pierce any price action here, right? Because it's already done here. So that means that we can definitely go lower below this low. So to me, that was the idea. That was the trade idea. I was like, okay, this is going to work. Unfortunately, what happened was when I drew my OT, right, as you can see, this happened Friday. got broken Friday, and then now it's going to be reacting on Monday. So, you know, a whole weekend to do that. Swing high, swing low, OT, draw that shit out, line it up. You can see that the OT levels line up with the -4, even more confluence. And so what happens? Well, Monday, 3 a.m., 4 a.m., 4 a.m. hits the OT. Nice reaction off of it. Uh-oh. What do you mean nice reaction? We didn't get shit out of this. We came back into a what? Discount array that it just created. Bought back up. Came down. So this would be what? Consolidation, right? This whole kind of part is like consolidation. We don't really want to see this. But what else do we have? If you guys remember on the 1 hour, we were talking about that order block here. If we go on the 15-minute, SPX has that order block. Let me go on like this. 15-minute. Let's do this just so it's easier for you guys to see. So NQ has the market structure shift, but not SPX. But SPX has the order block. And so let's see this price action. We come up here at 4. You can see SPX does hit that order block, 15-minute order block, 1 hour order block, whatever you want to call it. NQ hits the OT. So 2 different confluences, same price action. NQ or SPX does trade lower, but doesn't trade below these lows. Then it trades higher, back into the consequent encroachment of that order block. You can see that when price did this, where was the price on NQ? Barely at the OT, almost about to hit it. Comes back down, same price action here. And then this is where it's important, right? 9:30 open. On NQ, we get a very, very volatile open. We go down, we go all the way up, tap into the OT. This is where This is where I was watching. Only problem is if you took a trade here and you went short. Oops, down here. Whoa, why is it like this? You went short down here. Stop loss was this. And your take profit was, you know, you were talking this, for example. I'm sure you would have gotten, let's see, 1 to 1. Some kind of take profit somewhere at these lows, probably. That would be smart to have here. So you'd probably be break even, to be honest. Break even. But you can see SPX. SPX did not have that market structure shift. And let's just see if we draw the OT here, what do we get? We don't even get a tap into the OT. So that even shows you even more confluence that OT was not valid. So that's one of the mistakes I did today. If you're still listening, the mistake I did was looking only on NQ for a S&P 500 entry, right? Because I only trade the S&P 500 now because I don't have my funded account now. So why was I looking at NQ for the S&P 500 price action? That doesn't make sense. And actually doing this now makes me realize the big mistake, because if this doesn't line up with this, then there's a problem. And if the price action here shows choppiness, which I will show you in 1 minute, because, you know, let's say that you hadn't, oh God. Where was this? Oh God. Where was this? Was it here? No, 9:30. Where the fuck was 9:30? Was it here? Oh yeah, it was here. 9:30 taps, boom. Yes, you go down, you go down, you go down. You know, that's great and all. You go down, but it's choppy. It's good so far, but it's choppy. It's choppy. It comes down here. Choppy, comes back up, comes back. I mean, you don't really want to see this. And this is, you know, when I saw this, I was like, oh shit. I told myself, this is what we had on Friday. I'm pretty sure. This is exactly what we had on Friday. If you guys remember what happened here on this bullish run up, this is exactly what we had on Friday. Let me go and try to find that. Yeah, look at this. Look at all this. I want you to notice something. You see all this low resistance liquidity here, the sell side, and you see this like big expansion up. That means it took everything out here. This is exactly what I saw here. Look at all this low resistance fucking, oh my God, where the fuck? Low resistance. So when I saw that on the 1 minute, I was like, oh shit. Now, I went back to the 1 hour. It was like, if this is going up, what is the confluence for price to come up, right? Because I knew damn well that after the price action we just got, it was not going any lower. We just created another 1 hour candle here. I knew that from that time, we were not going to go lower. And if we were, then we had to pierce through something. And this was a 1 hour BISI. This was the confluence I had for my buy model. And I said this in the Discord. I didn't like call it out, but I did say possible buy model at 1142. You'll see the price action on, I called that on SPX. We'll go to there. And you'll see how that turned out. Now you see on NQ, this is where I had it. This was the confirmation on NQ. I was looking for a model on NQ, and then I was looking for something on SPX. So let's go to SPX and look at that. Let's go to the 1 hour. Let's see. Is there something on the 1 hour? No. This was the fair value gap, or the BISI that happened on NQ. If you let's just switch. I love this. Let's go to NQ. You can see this blue gap. Let's just make it green too, just so you guys don't get messed up. This green gap is this on NQ. Now look where price does on the 15. Let's go to 15. Now price taps into this blue gap, but not SPX. And I was looking at both time frames, and I'm lucky I caught this. But I was like, wait, isn't that an SMT? This low swept these lows, and these lows look similar to these. Yeah, they line up in time. So these lows got swept by technically this candle here. That's a bullish SMT. Look how big this SMT is. That's that's almost 3 lows taken out. Boom, it taps into that. So what I did was I looked for a buy model. I was looking to trade on the S&P 500, but I looked for a buy model on NQ first to make sure that it reacted well off this PD array. And then I went to SPX and I was like, okay, is there a buy model on SPX, and can we trade SPX? Now, as you can see, when we go to form a buy model on the 1 minute, I always take my entries on the 1 minute if there's a buy model. You can see what happened. We sweep, and this is NQ, by the way, we sweep internal sell side liquidity. We tap into that 1 hour BISI. Price reacted off well. Now, where's the only market structure shift that can happen? Again, there's that low resistant liquidity, lots of engineer liquidity waiting for us. We can delete that OT. We can draw the standard deviation. Where's the standard deviation lining up to on the 1 minute? It's up there. I was like, there's no way it reaches up there, but I'll talk about it in a second. Let's change this to this. Okay, what happens? Well, what happens is price reacts off of it very nicely. Now, this could be a fake out. This could react off of it, go away, and then hit some kind of array, some liquidity, and just come crashing right back down. Let's see what happens. It comes up. I'm watching this live. 11 comes up. Boom. This is the candle I want to see. Breaks above that market structure shift. It closes above. Now, what am I looking for? This is the mistake I did on NQ, but not S&P 500. NQ, what happened? I didn't notice this fair value gap, by the way. Let's just get this clear. I didn't see this. It wasn't the discount. And it's actually the first fair value gap that we look for to get created of the displacement to get that market structure shift. So like a fucking idiot, I was over here with my fucking OTE, and I was just going, oh, okay, so is price coming down? Didn't come down, but it did hit that it did hit the entry, but it didn't come down to the OT. So I was still not in. Keeps going up, and you guessed it, it just keeps going up. And I'm like, at one point, I'm like, holy shit, it hits the -1. I'm now like, okay, well, this cannot come back down. It's already hit -1. And if it does, it's way too much selling pressure to come all the way back down. We're basically selling everything we've just bought. So there's no way that there's anything on NQ, right? And while we're watching this, I catch an entry on the S&P 500, right? Now I go back on NQ, right? After I trade on SPX, I'm like, this is what I missed. I missed that one singular fair value gap. So if I didn't pay attention to the OT, I would notice this fair value gap. You can see that price taps into it, but it doesn't fill me because it's not the consequent encroachment. Look, it barely a tick, right? So that's on NQ. I didn't take the trade on NQ. I took the trade on S&P 500, and we'll check that out. So like I said, once I saw that buy model get created on the NQ, I went straight to the S&P 500 to see if that same thing was replicated. As you can see, the bullish SMT, this black line, was this low. So to be honest, I did not care if there was like if there was like something here, right? Because we had that bullish SMT. So yes, it looks weird to have like a blank chart here and like there's nothing reacting off of price. I know it looks weird, but to me, the bullish SMT with NQ was enough for me to direct price up, and I didn't need anything here. You can see internal sell side liquidity swept. There was something else liquidity here, but it didn't reach down to it. I just like a little order block. Nothing too worried about. What ultimately happened though, and what I personally saw, was on the 1 minute, you can see NQ, same price, 11.16, broke out of that. Market structure shift, you can see beautiful standard deviation. NQ and S&P 500 lined up quite literally perfectly. It was perfect. Literally the most perfect setup you could ever have. You look for a retracement. Let's look if the OT is lined up on this one. Here, it does not line up. But I was looking for a fair value gap here. But I'm pretty sure I got this. So I don't know why the fair value gap was here. But because that was my phone charting this, but the actual fair value gap I noticed was this tiny little one right here. You can see this one, right? From here to here. And you can see price does tap into it. It does. But I'm wondering, I had the entry here, and it was like this. Maybe it's on a different time frame. I just checked the 3 minute. I forget all this shit, bro. I'm not gonna lie. The 5 minute doesn't have anything. What about the 3 minute? Where did I take this entry on? Oh, yeah, right. It is the 3 minute. Where is it? Right here. Right, like this. There we go. Got a little confused. Sometimes I draw shit on my phone and it's just the fucking worst. So, entry was somewhere down here, and yeah, this was on my phone, so this was fucked up. But it was the entry. The actual entry on my contract was probably like up here, to be honest. But this is what I like to mark. But yeah, it was probably up here, just to be realistic here. Now that does cause a little problems. Obviously, if you're guessing where your contract is, it's a little hard on options. But if you're doing like stocks or whatever, you can, or like on TradingView, you could probably tell exactly where you entered. But on options, I'm guessing it's in this wick, in this candle. I'm just going to say like up here. The stop loss itself. Now, this is, why can I not see? Okay, the stop loss itself, right, was under this fair value gap. But now that it's down here. Yes, thank God. Yeah, hold on. Someone just texted me. Hold on. Okay. Just texted her back. All right. So, yeah, you get your entry. Again, this entry is a little wonky. I don't know what happened to my phone. I can't find the fair value gap. But basically, what you would do is you draw the range, right? It's from the swing low here to the expansion of the swing high. Where is it? Oh, that is the wrong thing. The range, right? So you look at the equilibrium. Where's the equilibrium? The 0.5 here is the equilibrium. Anything under is a buy. Okay, so anything under is a buy. You can tell that there's two fair value gaps here. The first one that gets created is this one, right? This tiny little one gets created, and then there's a second one on the 3 minute. Now, the one I chose was the 3 minute because there was two right back to back. When you look on the 3 minute, what's the one fair value gap that they create? It's that one. So that's the one I just chose. So this green one goes away, right? So that little one right here gets chosen over that 1 minute. If the 3 minute doesn't offer a fair value gap that lines up with another one, if the 3 minute doesn't offer that, then you go down to the 1 minute and you find one little fair value gap. As you saw in NQ, that's the one that worked. But if NQ had like two others right above them or right under them, I would choose whatever the first one is, and I would look on higher time frames to see what other fair value gaps are there to choose from. Now, the stop loss here, knowing that there's another fair value gap here, I wouldn't want to see price come down to that second fair value gap, so I'm going to price it like right at this high. I don't know why it's funky like this, but I'm just going to say it's like right. Okay, can't fucking place it there, but whatever. Okay, let's talk about take profits and everything. Obviously, you have standard deviation. Price comes up, 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 up. You have these equal highs kind of lined up here. Not too big of a worry. The first take profit will be your -1 here. So, oh my God, why is it like this? -1 would be like your first take profit. You can see we take that out in no time, like sweep above these highs, all this low resistance. The only thing I'd be worried about would be this fair value gap up here, right? Which it does have an impact, but by the time that you're here, the -1, you're trading a consequent encroachment, your TP1, you can see that if this fair value gap or the SIBI had an impact and has to drive price even lower, then it would have an impact and you'd have your first take profit already taken. If you wanted to take profit earlier, then guess what? You can. I'm not forcing you to put your take profit up here. You can put your take profits at these highs up here. And listen, that's still fine. At least you're still in the trade. You're still in profit. I'd like to just be a little more risky and put them all the way up here, just because I've seen the strategy worked out so many times. You can see that if price wanted to go down because of the SIBI and needed to go down, it would have broke structure. It would have came all the way down and we'd have seen that in price. But because of the SMT and because of the divergence on SMT and because of the market structure shift on NQ, I was patient and I knew that this was going to go higher. Now, did I predict all this? No. But I did set my take profit all the way up to the, what was it? 2.5. Yes, 2.5. That was my, oh my God, why does it never line up? We'll just put it over, whatever. So I had that marked out. The -2 is always a big area of confluence, but you can see there's something so special about the standard deviation that I just love. Is price got so close, and I mean so close to taking out that -2, and then it just reversed on us. It was like, holy fuck. What's interesting is that because it got so close, it's almost like it can almost get there. It was reaching for it, and it got swept by the waves. You know, it's like you're swimming, you're about to touch the rock, and the waves push you away. But guess what? You swim even harder to really touch the rock. That's what the stock was doing. It got pushed away. It was so close to reaching the range, so close. There was no other liquidity except like some fair value gaps down here. But what I was really watching was the -2. Got so close. Broke above all these highs. Really broke out of the range. Really showed distribution. And they came down. This was the important part. If this price or this candle closed below any of these lows, especially where's the lowest low? Equal lows. If price closed below any of these lows, you would probably want to get out because the amount of selling pressure, basically 3 candles, completely erased what we had in 50 candles, which is big. That's important to note. If price closed below this low, which is what I was watching, this was probably right during lunch, like right in the middle, smack down right before lunch or in lunch, completely sold off. Those 2 wicks saved us equal lows, buy side or sell side liquidity, my bad. As we can see, we come back again. We don't want closure. You can see these wicks in this body. We do not want this body to close. You can trade down. This is where you're like panicking and shitting your pants. But you can see we also sweep this low. So there's a lot of confluences down here. Usually you'd already have your take profit 1, maybe 2 already set. Like I'd be fully out, if not 1 runner left. About to close my runner here. You can see price comes up. And I was looking to take a second trade because of the confluence that we have here. So because I knew that price wanted to go up to the -2 here, I knew that this buy side liquidity would be targeted. That's 1. So let's mark this. It would be targeted. And I knew that this -2 would also be targeted, same level. And I knew that -2.5, even though it was so close, could also be targeted just for the end of session or the end of the day. To my surprise, let's see, I went to the 5-minute. The 5-minute fair value gap I found right here. Wait, was it a 5-minute? Hold up. Wait, where was the thing I found? It wasn't 15. No. Where was the fucking gap? Dude, everything changes on fucking my phone, dude. What? No way it was in 1 minute. I did not pick this on 1 minute, yeah. It was a 1 minute something, and the thing I had marked out was this range. I had the swing low here, and then that swing high that got created. Just look how beautiful this is. Let's go on the 1 minute. Okay. Here. When price comes down, I was watching this 5 minute. I entered off the consequent encroachment of that 5 minute gap. And I told myself, okay, well, price, we could set our stop loss here. But you can see that price absolutely ran through that. So it would not be smart. And listen up. Listen up. Let me shift this to the side. This would be a risky play. Now, yes, we are already in like a super big buy model. We're about to go up. Who knows, right? The problem is this is not my strategy. So why would I use my strategy's entry and stop loss for something that isn't even my strategy? Okay, remember that. Why would I do that when it's not even my strategy? So why would I have my risk so like right here, even though I know that price can maybe go even up? I know that because it needs to go up, it just hit the discount here. The discount is right here. So I knew in the back of my mind, entering in this premium fair value gap was not a good idea. But I still entered. I wanted to be in the position because I knew this was going to go up because of the order flow. But I knew damn well that the stop loss and being set right under the discount was not a good idea because it could easily do what? Sweep it because it's under the discount, which means that there's a lot of sellers coming in and then it's reversed by buyers. So the sellers are going to go as deep as they can to grab as many sellers. And guess what? Grab as many sell stops they can. So all the retails that are trading like this will have their sell stops set down here. Stop loss gets hit and everyone starts buying. So guess where my stop loss was? Equal lows down here. Why is it not teleporting there? Whatever. Equal lows. It is also another state of confluence, and I was ready to be taken out when price came down, but as you can see, missed it by barely a tick. Barely a tick. Okay, consequent encroachment, barely a tick. Came back and targeted the negative 2.5. Now, on this trade, I also targeted the negative 2.5. I was not trading any higher. There was no, and the reason for that is there was no market structure shift here for me to do standard deviation and go, okay, yeah, let's target up here. No, it was just simple, easy. Because the main trade here was not finished, I was like, let me take another trade to really finish it off. And you can see that it worked out pretty well. The part I really want to talk about though, what the fuck is this black line doing? What is this? Wait, what the fuck is this black line? Oh, it's this. Oh, bro, I'm stupid. The part I really want to talk about is this fucking manipulation we got at 3. Again, absolutely no news, no event, no FOMC. Jerome Powell was not speaking. He was in bed. He was laying in his bed. He was comfy. He was reading his late night story. 3 p.m. Get the absolute wackiest thing I've ever seen. Our main target for this whole week was this daily -4 buy side liquidity or I guess standard deviation thing. Look how close we get to it though. I thought this was going to be like a whole week of like expansion. No, we took this out the Monday of the week. So this whole week is either going to be a fuck ton of chop. We're going to chop around here in these highs up here, or we're going to go down and chop around. This whole week is going to be chop, or we're going to get a fuck ton of news, which we are. And we're going to go either super up or super fucking down. This might just be pre-market. Asian and London might take this out. New York session might retrade into it, and we're just going to fucking a dumpa. We might just do that. But you can see manipulation. Like I said, I hate trading these markets because they're so manipulated. This is a pure example. Who the fuck is doing this at 3 p.m.? It's a good, 3 p.m. They're not doing it at 2:56. No, they're doing it at 3 exactly. So this was timed. It was planned 1 hour, exactly 1 hour before market closure. That is definitely a hedge fund or a bank, or multiple actually doing this all at the same time, buying a bunch of fucking orders And you can see they're not buying orders in discount and premium. They're not off of fair value gap. It is just completely fucking random. And you know what's funny? Is this fucking price action before. People knew. People had the information right here, right before. People know. People stopped selling. Look at these wicks. People knew that this was coming. And right here, bro, they just stopped everything. This is not trading, bro. This is not going anywhere. They were not doing anything. And then they knew. People knew this was going to happen. And they stopped trading. Everyone stopped trading. There's no volume. Psh, fucking shot up. If you took calls right after this, I mean, goddamn, just this would be gambling, I know, but still, that would be, holy shit, dude. You'd be making bank, bro. It's basically CPI day, just without being at CPI day at all. And you can see even on the standard deviation, the negative 5.5 was traded all the way up here. You can see barely any reaction. It just traded all the way back up. Yeah, price was manipulated, but you know, pretty good trades. I'm really happy with it. What I'm mostly happy about was the decision making I had. Right, so I was biased. I had a bearish bias. As you can see, it was obviously wrong because we had a bullish bias in mind. Obviously, NQ did have a higher hand here and swept this fair value gap before, but as you can see on SPX, this was extremely bullish. We had bullish SMTs, bullish liquidity taken out, and all we wanted to do was go higher. And we took out all of those highs, previous day high, previous week high, and we really went higher. So now this is just a waiting game. I'm definitely not looking to trade tomorrow whatsoever. And if I do trade, it's basically gambling for me. So I'm willing to take that risk. But yeah, I will catch you tomorrow, after tomorrow, Thursday, or Friday. Peace.